Hello, I'm Emilie Bellet, founder of Vestpod and author of You're Not Broke, You're Pre-Rich, and you're listening to The Wallet. Every week we give you the best tips, guidance, and a good dose of inspiration and motivation to manage your money better. Today I'm diving into creating a monthly budget that truly aligns with your financial goals. Budgeting might seem daunting or restrictive, but it's really about gaining control, achieving financial stability, and working towards your goals, your aspirations. We'll cover how to analyze your income, understand your take-home pay, and set up a saving plan, including a pension, and manage your expenses effectively. If you have any questions you'd like us to cover on the show, have any questions about this episode, send us a DM on Instagram @Vestpod.
Remember that we are not certified financial advisors. Information shared in this podcast is for educational purposes only and does not constitute financial advice.
Many people have no idea how a pension works. Enter PensionBee, a leading online pension provider who's on a mission to make pensions simple so that savers across the UK can have a happy retirement. PensionBee's website and app make it simple for customers to combine their old pension pots, contribute flexibly, and withdraw their pension money all in one place. Download the app to get started or head to pensionbee.com for more information. And remember, when investing, your capital is at risk.
So we always receive so many questions regarding budgeting and preparing a budget. So this is what I want to cover for you today, how to create a monthly budget that works for you. It's a topic that's really key. It's fundamental to financial success. Budgeting is often perceived as restrictive, but I find it an empowering tool. It helps you to take control of your finances today and also work towards achieving your dreams, achieving your goals. I understand that many of you dread budgeting, they don't know how to start, they keep postponing it, they're procrastinating, and if you've never done it, it can feel like a tedious chore. But let's change how we see budgeting. I'd like to call it a spending plan or saving plan instead of a budget, as that's really what it is. And today I'm guiding you through how to make one, so you can grab a pen and paper or you can open your laptop and pause this episode whenever necessary. We look into practical strategies to create a monthly budget that aligns with your unique circumstances and financial goals. So before we put pen to paper, it's crucial to start with the why behind your budgeting. Why do you budget? What are your financial goals? Are you saving for a dream vacation, a new home, or simply for financial security? Understanding your reasons gives purpose to the process and keeps you motivated. So always remember, budgeting is not just about managing money. It's about aligning your spending with what truly matters to you, allocating your money into different buckets. If you want to go back to writing your goals before you start your budgeting exercise, we made a podcast episode about this. You can find the link in the description of this episode. It's called How to Set Financial Goals. Okay, let's get started. Step-by-step guide to budgeting. The first step in creating an effective monthly budget is gathering all the necessary information. This is probably what will take you the most time and could be the most stressful if it's the first time you do this exercise. We'll base our budget on your latest full month of data. If you're a freelancer or have variable income, it's a good idea to look at an average over the last 3 months to get a clearer picture. You need to know where to find all this information. So you need to check your bank accounts and your credit card statements. You can print out these statements, but you can also access them through your banking app. I just want to do a quick note on credit cards. When you handle credit card payments in your budget, and that's what a lot of people are doing, they're really spending money via their credit cards and not necessarily via a debit card, so that will show on a separate statement. It's important to treat credit card purchases as regular expenses for the month in which they occur. So for example, if you buy groceries with a credit card in June, include that expense in June's budget. When the credit card bill arrives, consider the payment as debt payment rather than expense. And this helps to prevent, double counting, and it provides a clear view of spending. So each month, ensure that you allocate funds to cover at least the minimum payment due on your credit card to avoid penalties and protect your credit score. with credit cards, aim to pay off the full balance to prevent interest charges, which can very quickly add up. And it's also why to regularly review your statements to check for any errors, fraudulent charges, and adjust your budgets. So for example, if you have a £500 balance due from June's purchases, budget for that amount in July under debt repayment. This approach ensures that you're not only meeting your financial obligation, but also maintaining a clear and accurate budget that reflects actual spending and debt management. Step number 2, list your income and calculate your take-home pay. Write down how much you earn per month. Whether you're self-employed, or a combination of both, working out your take-home pay after tax can be tricky. If you have more than one job, your main job, side hustles, investments, or any other revenue streams, then add them to the list. Make sure you're looking at your take-home pay, also called after-tax income. This is the amount of money you have available after deducting taxes, paying taxes, and other mandatory deduction from your gross income. In the UK, you find this information on your monthly or weekly payslip, which details your gross earnings and deductions for taxes, national insurance, and pension contribution, leaving the net income figure. Alternatively, checking your bank statements for your salary deposits can give you a clear picture of your take-home pay. You can use the HMRC personal tax account online and any end-of-year P60 and P45 forms from previous employment. Another tip is probably to use online calculators like those from Money Saving Experts or HMRC that will help you estimate your income. Now, if you're a freelancer, you will have to factor in taxes due to the often variable nature of freelance income. So you can start by estimating your annual income and calculating your tax obligation, which include income tax and national insurance contribution. A good practice is to set aside around 25 to 30% of your gross income to cover these taxes. This ensures you're prepared for tax payments and avoid surprises. And to stay organized, you can transfer this estimated tax amount into a separate saving account each month. If you expect to earn more than £125,140 a year, putting away 40 to 45% should cover your tax bill. And then deduct any money you have paid towards a private pension, but I will talk about pension a bit later on in this episode. So this take-home pay figure will serve as the foundation for your monthly budget. And in your spreadsheet, you can start creating 2 columns, one for the category, what's the account, what's the income source, and another one for the amount of money you've received. Step 3, categorize your expenses. Now let's look at expenses. One of the most, I think, effective budgeting strategies is to categorize your expenses into 3 categories. It's simple, it will help you to remember these numbers, but you can also try to break it down into smaller categories if you prefer. So categories number 1, needs, my essential expenses. These are necessary for basic needs, such as housing, utilities, food, debt repayment, and transportation. Second category, my wants, my non-essential expenses. These are discretionary and can potentially be reduced or sometimes eliminated. And just big examples are dining out, entertainment, giving, and subscription. And finally, my third category is savings. This includes money set aside for future needs, emergencies, investments, and any goals that you may have. So you can start going through your statements, and if on paper, you can start highlighting the different categories with 3 different colors. Now you can start adding what you see on your bank statement to your notebook or spreadsheet according to the category. Calculate the total for each category and compare it to your income by dividing your expenses on your take-home pay to see how much you're spending in each area. And just take a moment to look at the results. Are your essential expenses taking up 50, 60, 70% of your take-home pay? What about non-essential expenses? And how much are you actually saving every month? This is just like the first time you see these percentages. This just gives you a clear picture of where your money is going today. But you will be able to make improvement, will be able to change this budget. This is just a fact. This is how your money is being spent today, and that can reflect also some of your financial habits. Once you're done with your own numbers, you could use a rule or benchmark, even if the benchmark should really be how much do I want to allocate to my savings. You will need to adapt some of the rules to your needs. So today I'll just be introducing a useful guidelines called the 50-30-20 rule coined by Elizabeth Warren, now a Democratic senator from Massachusetts, but then Harvard Law School professor back in 2006. With a 50-30-20, you allocate 50% of your take-home pay for essential expenses, 30% for non-essential, and 20% for savings. But please don't take this rule for granted. At Vestpod, I've seen many people adjusting the rule, especially with high housing costs, depending on how junior or senior you are. If you're living in a big city, your rent or your mortgage is going to be expensive. You want to be agile and flexible. You just want to have your own percentages. So just take this as a benchmark. Just think, if you're spending 70% on your need, this is probably where you need to start from. And you can also give you some slack on the saving rate. So you need to determine what your percentages are for you to save for your goals and also pay for your needs and wants. If you decide to opt out for this method, 50-30-20 or any variation of it, consider automating your expenses each month. This means that your income is automatically divided at the beginning of the month in accordance with your rule. Step 4, have a plan. You need to give a job to your money. I love this, like thinking about each pound that I earn, I will give it a job. Now that you know where your money is going, you can work towards allocating it proactively. And your motivation and how you do this should come from setting realistic goals. So I just wanted to go through some important goals. One, the main one, you want to be paying yourself first. When budgeting, it's crucial to adopt this mindset of paying myself first. This means that I prioritize my savings and investments before covering any other expenses. So by doing so, I ensure a portion of my income is consistently allocated towards my financial future, but also towards my financial security. And that slowly becomes a habit of saving and creating a financial safety net. And as an example, a highly effective way to implement this strategy is by contributing to a pension plan. Let's do a quick recap. So unlike regular savings, pensions in the UK come with a special benefit called the tax relief. This means the government boosts the money you contribute to a pension. The amount of tax relief will depend on your income tax rate, if you're basic, higher, or additional taxpayer. Let's just look at basic rate taxpayer. If you're basic rate taxpayer, for every £80 you contribute to your pension, the government adds 20, making it a contribution of 100. For higher rate taxpayer, you contribute 60, the government adds 40, resulting in a total contribution of 100. And for additional taxpayer, you contribute 55 and the government adds 45. If you're an employee, you will be contributing 5% of your salary and your employer will be contributing 3%. That makes it 8%, which is a significant advantage for employed individuals compared to self-employed or freelancers who do not have an employer contribution to their pension. Just a few points on pension. There's an annual allowance of £40,000 or your annual income, whichever is lower for pension contributions. Just make sure you follow the pension rules and the regulation to ensure that you comply and you also maximize your benefit. What's also interesting when you're employed is that sometimes your employer is also matching your contribution. So don't leave money on the table and see how much they're matching on your contribution. Okay, a few more tips when we think about goals and when we think about top priorities. Pay those debts. Because with debts, you actually pay for yesterday, especially when we think about short-term debt, credit cards, payday loans, overdraft. These tend to be extremely expensive and they will have an impact on your budget. So tackle these first. Long-term debt are different. They are budgeted. They tend to have lower interest rates. So really think about tackling this short-term debt. An emergency fund is really important. We've talked a lot about emergency funds, but building this safety net should also be one of your top priorities when you look at your goals and when you look at your saving bucket. Where am I allocating this money? And then look at short, medium, and long-term goals. And again, going back to your plan and what you're saving for. Take your budget to work toward this goal one at a time. And this will help you balance your needs, enjoy your life today, and also build a secure financial future. Step 5, review and reflect on your spending. Now that you've looked into details in how you're spending your money and where your money is going, review your spending habits. Are there any subscriptions or recurring expenses that you can cancel or negotiate? it's amazing how often we pay for things we don't even use. So here is a little checklist. These are some of the things. You can write them down and really go into the details of, where can I save some money? So cancel a new subscription. You've all tried for a new app or something, you keep paying for it, or gym membership you don't use, and you can cancel this. Negotiate lower rates on recurring bill or considering switching to cheaper suppliers. That can help, and you can start comparing the different rates. Identify areas to cut back without sacrificing your quality of life. Checking for duplicate or fraudulent charges on your accounts. Bank charges very often, even if these are small amounts, they tend to add up over time. Review memberships and services. Another one that's really important is impulse buys, especially from Amazon. You can look at how much you're actually paying for these services. Late fees, forgetting to return clothes, that's something you're not going to see on your account, but if you see you purchase something, you've tried the clothes, you don't like them, but you didn't send them back, there's money to be made here. So just look at your statements. You can explore budget-friendly alternatives for your regular purchases. So can you plan in advance to buy certain items you need? Can you wait for the sales? And finally, one of the best tips, and we recorded a very interesting podcast episode with Asha Barber about that, is exploring your relationship with consumerism. Reflecting on spending habits, priorities, embracing principles of circular economy by choosing products and services that are more durable, recyclable, consider minimalist practices. This is all something you can start doing when you have an idea of where you actually spend your money. Just a quick tip here also on spending that's quite interesting is developing a new mindset where you always pay yourself when you buy something. So for example, you want to buy this new coat, £100, can you put aside an equal amount into your savings? And this way, every purchase is matched by a contribution to your financial future, and that promotes responsible spending and consistent saving. Once you're happy with your current budget, we can work on planning for the upcoming month. Just a side note, as you go through this budgeting process, you might experience a range of emotions, usually guilt, empathy, and a lot of others. But whether this is your first time or regular practice, remember not to judge yourself harshly. The past is behind you. Focus on moving forward and improving. Establishing a solid budget now sets a strong foundation for the month and years ahead, and this is really refreshing. It's really liberating. And also don't compare your journey to others. I repeat this again and again, but it's really key. It's your budget. Personal finance are personal by definition, so really focus on your own situation. Step 6, prioritize your expenses. With your expenses categorized, it's now to look at what's more important for you, what has an impact on your financial well-being. So you can reflect on your personal values, your goals. Do you want to prioritize travel? Do you want to prioritize saving for retirement or fund a passion project? Your budget should really reflect these priorities. You can allocate funds for your essential expenses first, ensuring that your basic needs are met, and then set aside for your financial goals, emergencies, paying off debt, investing for the future. There's another method that's quite interesting that's called the zero-based budgeting method, and that gives your money a specific job, ensuring that by the end of the month, all income minus expenditures equals zero. Unlike the 50-30-20 rule, which allocates broad percentages to different categories, the zero-based budgeting involves fine-tuning your budget to account precisely for fixed expenses, variable costs, and savings down to the last spent. Just a quick tip, creating a budget contingency plan is crucial for managing the surprises life inevitably throws your way. So I would say, your emergency fund is really important. And you could also have a line in your budget that, miscellaneous, where you have a little bit of money for stuff that's not like a regular item in your expenses and in your budget. Budgeting for couples. If you live with a partner, it's a good idea to budget together for the household. This might prompt some awkward conversations, but open conversation and compromise are key. So you can discuss your individual situations, your goals, your spending habits, and also create a joint budget that covers shared expenses and individual discretionary spending. If you have different incomes, you can consider dividing expenses proportionally, and this ensures that the financial burden is shared. And for couples with very different financial mindset philosophies, you can, of course, seek guidance from a coach or financial counselor. I always think that's really helpful. But remember, it's really about communication, and working as a team, making sure you help each other financially, and you also have a common pot and common goals. When to use technology in your budget. So you can choose between a lot of different apps. You can also use an Excel spreadsheet depending on your needs, your preferences. But budgeting apps like Yolt, Money Dashboard, Emma are quite good if you want this on your app. They're quite convenient, they're accessible. And these apps integrate with UK banks, so they offer real-time updates and features, like you can categorize your expenses. They have quite user-friendly interface that are quite visual, so you can very quickly see where your money is going. You'll have a few notifications. They can help also you save in the right pockets. On the other hand, you can also use an Excel spreadsheet. They offer more flexibility. You can customize. You can have more detailed tracking and analysis. But it doesn't need to be complicated. But it's just a matter of going back to your spreadsheet and looking at your numbers and really owning your data. It's really important to know, where is my money? Where is it going? And do I want to customize my budget? Step 7, adjust and optimize. So after allocating your funds for essential expenses and financial goals, review what's left for non-essential spending. You can look for areas where you can cut back without compromising your quality of life. So budgeting throughout the years can vary also significantly between the season. I mean, what you do in the summer is not the same as in the winter. In the summer, you may go out more, you may go with friends, you have the summer holidays, so you will be spending money on that. In the winter, you may see higher heating bills, you may see your Christmas spending. So that will really depend on how you spend money. But because you're agile with budgeting, you will be able to adapt your financial plans accordingly. So it's just about proactively allocating resources, prioritizing saving, and adjusting spending habits to maintain this level of flexibility throughout the year. Step number 8, track and adjust. Budgeting is really an ongoing process. It's never perfect, but it's essential you track your actual spending against your planned budget and make adjustments as needed. Once you set up with your budgeting app or you use your spreadsheet, you know your categories, you can use visual representation of your spending patterns, and that helps you, stay on track. We tend to do budgeting every month. You can do it more regularly. You can do it on a quarterly basis, but it's really important to come back to it. And once you've done it for a few months, or once you've done it for a few quarters, you will get into the habit. You will know what happens. Of course, if you're getting a pay rise, you have to look at your budget. You have to adjust your percentages. You have to review your goals, make new financial decisions, and always be mindful about where your money is actually going. So I hope that was helpful to creating your monthly budget that aligns with your goal. Remember, it's not a one-time exercise. It requires a little bit of discipline, commitment, and regular adjustments. And embrace the process, and you'll gain a sense of control, financial stability, and the ability to achieve your goals, to achieve your dreams. Thank you for listening. Before you move on to your next listen, copy the link to this episode. We're trying to get free financial education to women, but we need your help to do that. If you enjoyed this episode, send a link to a friend who might learn something from it too.